introduce our next guest, who is the Chief Economist and Partner at PwC, Jeremy Thorpe, who is, the economic guru. Jeremy and David will be discussing the domestic and global economic outlook in the age of COVID-19. Can I remind you once again, send your questions in for the Q&A session afterwards when you get the opportunity to contribute. And I will be monitoring them during the session, so we'll get to as many of them as we can. Can I now welcome back David and hand over to Jeremy?
Margie, thank you very much for that. Jeremy, welcome to you. Good to see you there virtually. We were talking with the Deputy PM about the fact that he doesn't have a crystal ball. Fortunately, you do, so you can give us plenty of insight as to where we're at, where we're going. Well, perhaps we should start there. What is your sense of how long this recession, first one we've had for 30 years in this country, how long it's going to last, when we should be expecting to see some turnaround?
Well, maybe rather than the word recession, because I think it's very loaded, we think it'll take another 2 years to get back to where we were at the beginning of this year. So in other words, the GDP level, we're going to have a hit for 2 years. So some of that is obviously going to be on the downward path and some of it will be a recovery. So clearly we've got a recession. If it goes another quarter, I wouldn't be surprised, but we will start to see the improvement. And in fact, we've already seen the improvement. If you look at jobs growth or even hours worked, maybe as a better indicator, we've had effectively 10 weeks since the worst of the original lockdown where we've been improving. So the beauty of going down is at some stage you've got to come up. This is not this is a health-induced recession. So it is different. It doesn't have that lingering effect in the same way as long as we either find a cure or we learn to manage the risk. Doesn't mean we eliminate the risk, but we just manage it. If we can do that, we'll be on the path to recovery.
And there are different stages of recovery, right? There's coming out of lockdown and being able to live alongside this virus, but then the hope that, we watch the news on vaccines every day and invest a fair bit of hope in it, that once that happens, well, then we can get a step change in growth. But for the government, what should they be doing in these various phases of downturn and then recovery? Are they getting it right, in your view, right now?
I think they are. I think, to use a health analogy again, I think we're triaging the patient still. You can't put fundamental reforms in. We talk about spending on infrastructure. This is not the time to suddenly say we're going to start building a high-speed rail. This is around, let's just stabilise the economy. And that's what it's been doing with JobSeeker and JobKeeper. Even with the phase down, it's trying to really make it so that as the worst of the health crisis unwinds, businesses are able to re-emerge. What you don't want to do is lose capacity, either in a human capital sense because skilled staff go off and do other things, or if you're in the aviation sector, planes just aren't available as you start to need them again, for example. So
just on that, I mean, in the aviation sector, with that JobKeeper payment coming down in various steps, do you think a lot of those workers will be inevitably looking for work elsewhere to get more income outside the sector, moving on to a more productive and profitable part of the economy?
Well, it wouldn't be surprising, and we're realistic about the scale of the sector hit for aviation. It's not going to bounce back straight away. It is going to take a considerable time, particularly obviously from the international perspective, but even the domestic perspective is not going to rebound to this instantaneously at the beginning of next year. So that there's some loss of staff is not fatal to the industry as long as it is not over that tipping point. You take every crisis to emerge how you want to be, and I suspect that Qantas and obviously Virgin will emerge as different beasts coming out of this, and will take the opportunity to rethink routes and rethink the way that they want to operate.
Yeah, well, and that's a whole other conversation there and how they're going to look on the other side of this. But you are confident that aviation will come back and will be able to attract back the core workforce that it's going to need to be, a competitive contributor to the economy.
I think because it will take a while, there is less risk of a shortfall at any particular moment. I think it's going to be a gradual recovery process, and so therefore demands for staff, for example, won't be instantaneous.
And you said now's not the time for big things like a high-speed rail, for example. But when we do get further down the path of recovery, I mean, are they the big sort of nation-building projects, as they're often called, that should be looked at once we get through this immediate period of crisis?
Spending on infrastructure is one of the most stimulatory things you can do, with one criteria, as long as it's productive spending. In other words, let's not just spend money for the sake of spending money. But in fact, the biggest bang for your buck comes from smaller things. And the Deputy Prime Minister kind of mentioned it about roads, for example. Fixing up maintenance, fixing small things actually is often a bigger bang for the buck and often a better stimulatory issue from the employment perspective. Large-scale spending often involves a lot of concrete, a lot of steel, a lot of foreign capital equipment. But in fact, that maintenance and focusing on just fixing up what we've got is often a better employment generator. So in the short term, where employment is, I think, one of our key focuses, if not the key focus, focusing on those smaller maintenance issues is going to be a better outcome for the country.
Yeah, shovel ready, I think, is the term.
Well, let's go screwdriver ready. Shovel ready still takes a while. Exactly. If we can just assemble the thing, that's better.
Yeah, we should get your thoughts too on what's happening internationally with our trading partners in particular, because we are a heavily trade-reliant economy, and the way COVID-19 is impacting on some of our trading partners, is far worse than here. What's your sense of what sort of impact that's going to have on us?
Well, initially we thought, we're not in a bad position here. China's going to emerge from this a bit faster than us. We'll ride the coattails of China a little bit. Geopolitics seems to have at least thrown a slight spanner in those works. But as long as we continue to be a seller of iron ore and coal into China, and that doesn't look like that's disappearing. Obviously, it's challenging for some smaller market segments which are maybe more easily picked off from a political or a geopolitical perspective. But we're actually not in a bad position in that perspective. Some of our competitors in those spaces really have aided us just by falling over a little bit more as well. The big risk in this is the US economy as a drag on global growth. Clearly, Europe is also an issue, but from us, and from our perspective, the US really needs to get its house in order so that it doesn't effectively drag down global growth over the next couple of years.
And we probably won't get much clarity in the US till post-November presidential election. But China, you mentioned there, I read this morning a forecast of China getting back to 8% growth. So just to focus on that for a moment, you mentioned this is great news for Australia's iron ore and other commodities exporters, but because of those geopolitical tensions, we might see the so-called discretionary items hit, and we've seen some of them hit already. What's that going to mean, do you think, for tourism in particular when it comes to the Chinese market?
Well, clearly our issues at the end of the day is, are our borders open in this space? And so that's going to be the first and foremost issue. If we're not opening our borders, then it doesn't really matter which segment of the tourist market we're after. Clearly, Chinese tourism has been the dominant growth segment that we've seen. Interestingly, also from a student perspective, and I kind of count them as tourists in some ways here as well. We've seen, obviously, a decline in forward Chinese students expecting to come here through visas, but we've seen an offsetting increase in Indian numbers. So at least in some segments, the Chinese decline might be offset a little bit. But clearly, from a high value perspective, if we can grow that Chinese market back, and it grew back after SARS, so we would hope that they would be up and about, and even if there is that broader geopolitical tension, that they would be continue to be a key growth market for us.
And look, a final one, the domestic political tension is clearly over the internal borders. We were talking a little bit about that with the Deputy PM before. What sort of economic impact does it have when borders are shut down, and who knows really how long now? The Victoria-New South Wales border, this critical border between the two big states, will remain closed. What impact is that having economically?
Well, clearly, movement of people is a big issue, and if you're in tourism, that's the second hammer. We can't get international, and then we can't get interstate. It falls entirely back on intrastate tourism, so that's going to be a challenge. And the Deputy Prime Minister was talking about how do we make the movement of goods, even if services can't be physically transacted through people moving, how do we make sure that goods are flowing appropriately. It hasn't been a big issue at the moment. I haven't seen that as being a supply chain problem domestically. I think it might be a different question if New South Wales is also then in a similar boat to Victoria. That, to me, is when it becomes a critical issue. At the moment, we've diversified our risk a little bit with Sydney and New South Wales being on different trajectories. If they're on the same trajectory, then we've got more of an economic shock.
Let's hope that doesn't happen. All right, Jeremy, thank you very much. I'll hand over to Margie again for a bit more Q&A.
Thank you very much, David. As we move back in here, are we appropriately socially distanced there, Jeremy?
Sure.
Yeah. So let me just start by asking you this. I think this is one of the issues that has been, critically important for all of the industries that we represent, and this is the confidence factor.
Great.
What are you actually seeing at the moment in terms of how willing people are to spend their money and to get out there and travel around a bit?
Yeah, so one thing we've seen, not just in Australia, but looking at other countries, is there's a couple of factors at play here. One I'd call pent-up demand. We've seen as people have come out of lockdown, they've rushed back to do things they've been allowed to do. It's probably at unsustainable levels, is our view. We've seen that in some of the hours work data that shows as businesses came back, they had a capacity to put more people on, but at some point it kind of leveled back. You only need so many haircuts. And so maybe you don't, I'm not sure. But at some point, if you're rushed back after you've been locked down, got your haircut, you don't do it again next week. So your rhythm resets. What we're seeing, though, is a real gender difference. And I think this is a real issue that business will start to need to think about, particularly in the way it's thinking about advertising. The ABS put out a survey this week that showed that men are, and I'd say maybe irrationally confident that we are going to get over this relatively quickly. But on every issue that women and men were asked about, going on travel, going back to work, catching public transport, men were far more likely to say, I'll do it sooner. Across the board, there was not one single category. So this is a gender difference. So it will be interesting to see how businesses respond to that. Do you chase the men and hope that they drag the women, or do you actually have to convince the women to do this earlier? So it'll be an interesting play. I'll look for the ads to see which way the business falls there.
Yes, well, they do say that women make most of the spending decisions, so I would say in every case convince the woman. But hey, let's go to some of the questions that have come in. And I'm curious about this one because I do think that they're another industry that's got a huge amount of profile over the last little while, and quite justifiably. The arts, the performing arts, etc., people tend to view them sometimes as a bit of a nice extra, but they're not. They have a critical role to play in terms of attracting people to destinations. They're a major part of the tourism industry, but also from a business perspective, they stimulate a capacity to innovate. I'm just curious to know how you see that economic value of the performing arts and the wider arts community.
It's a classic complementary industry here. It's not an industry that drives productivity elsewhere in the economy, so it's a consumptive activity. So we tend to, as an economist, you tend to think, well, it doesn't really matter if they're not doing that because we'll be spending on something else. But it has that role, particularly in tourism, I would argue, that people come and spend in Australia, and the arts and recreation, because it's quite a broad category, is one of those elements that if we're talking about having a holistic package for tourism, the arts has to be seen as going along at the same rate. It has those issues of criticality, of loss of capacity. You can't easily just turn some of that back on tomorrow. Even, say, the film, going to the cinema, it's a small segment of the arts maybe, if it's the arts, the pipeline has been disrupted of the production of films. They're not going to be there straight away. And the same is going to be with
major exhibitions.
Major exhibitions.
So forth, yeah.
You can't just put a play on tomorrow when you're allowed to. You'll have to train up and have the resources crystallise around it. So it's going to be even further out than social distancing being unwound. It's going to be a delay. How long that delay is, not quite sure yet, but it's going to be a challenge.
Very critical part of the economy, and I, for one, have been really pleased to see the federal government paying so much attention to them. One last question, if I can, and I think this is quite an interesting one too. There's been a lot of talk about government debt and global debt and so forth. Do you think the government has more room to move in terms of borrowings, and if so, what's the potential impact?
It does. The debt story is a kind of scary one on one level, and it's not too bad on the other. So the scary story is our projection is that the government won't get back to surplus for 20 years. And a couple of years ago it was projecting to pay down net debt in 20 years. Well, we now think that's 40 years away, just on demographics and tax take and so forth. But should we be worried about it? And the answer is no. the cost of debt is so remarkably low at the moment that it is actually very manageable from a fiscal perspective. As long as, and here's the as long as we are growing, so prioritising economic growth. This is what happened after World War II. We had much higher debt levels as a percentage of GDP, but we grew the economy and the debt actually became trivial, and that's what we can do here. This is why it is a different recession to previous recessions. In previous recessions, we had interest rates of, what was the interest rates in 1991? 18% or something like that.
Don't even want to think about that.
So we're at 2%. So it is a different environment, and so we've got a greater capacity. So I think the government has the opportunity going forward. Now, maybe it's not fun politically, and clearly it is putting constraints on locking in higher spending by phasing down JobKeeper and so forth. So it doesn't want it to balloon even more, but there is scope to think about using more debt.
Excellent news. Okay, and I know I just said that was the last one, but it's just this last little one's just crept in. In terms of closing the border into Queensland, tourism, cut its throat, nobody from Sydney's going, which is, of course, the biggest market into Queensland, unless you count New Zealanders, and they can't go either. At this point in time, the school holidays are past. Is it really going to be that big a deal? My gut's saying yes, because there's an awful lot of people who wait for the school holidays to be over to travel.
My suspicion it is less of an impact than you may initially think, just because of the school holiday factor from a tourism perspective. But again, the point is you need to have businesses getting cash flow on a consistent basis. So even if school holidays aren't there, we're in quote normal times, that the declines there doesn't mean it's more manageable in that sense. You'll manage your business through the ups and the downs. You can't have the downs continuing for very long.
Excellent. Okay. Thank you so much, Jeremy, for your contribution this morning. Much appreciated.